Hi there, welcome to Kneppy Invest. Great news for investors like me because it seems like the ASX is back to normal after 3 weeks in a slumber without any or much activity. We have seen a few interesting announcements released over the past 3 weeks, but it seems like the management of companies are coming back from their annual 3 week or 4 week leave. And we are starting to see more and more interesting announcements being released by companies, including trading updates, Appendix 4Cs, Appendix 5Bs, and just general interesting price-sensitive news from companies. And just today, on the 16th of January, we have seen a plethora of these interesting announcements. So I'm going to go through some of these announcements today, including two trading updates from retail companies released in the exact same minute, 8:24 a.m. And those two companies are Super Retail Group and Baby Bunting. And interestingly enough, one company released a quite positive trading update. The other company released a quite negative trading update, which is really interesting that different retail companies are seeing different things in their business. Every single trading day, the first thing I do after taking the dogs out for their a daily morning walk or jog is I go straight to CommSec and look at the announcements being released on the ASX today. This is my favorite platform to view announcements. You go through the ASX website or do whatever you like. I also filter it by market sensitive or price sensitive news. And this morning, as I went down to look at the announcements that had been released at that point in time, there was only actually 28 price sensitive announcements released at that point in time. We did start to see a trickle of really interesting announcements released. First one was from Black Cat Syndicate, and the title of this announcement was one of Australia's highest grade deposits. Now, Black Cat Syndicate has a market cap of $82 million. You can see the change in the share price is almost 20%. So the market has absolutely loved this announcement, and it does sound really interesting straight away. One of Australia's highest grade deposits, 356,000 ounces at 14.6 gold grams per ton. Sorry, gold per ton, grams per ton. I'm not going to open that up because it just goes into particulars of this sort of find or this deposit, but the market has reacted really well to this announcement. We'll have a look at the chart towards the end of the video for all these companies. And as I went further, we started to see a few Appendix 4Cs and 5Bs being released, including one from Artria, but that wasn't or is not a company that has any cash receipts. So I'm just going to skip that. No reaction from the market in regards to that particular announcement. But then we get into two really interesting announcements, two trading updates from retail companies, including Super Retail Group and Baby Bunting. We'll open these up to have a peruse of what they're like, just to see what I look at when I do look at these sort of announcements. I not only look at the numbers, I also look at the sentiment behind or in the commentary. Now, Super Retail Group are just looking at like-for-like sales from the first, say, 26 or 27 weeks of financial year 22 to financial year 23. And the company is experiencing some nice growth. And then you look at the commentary, and there was fairly good commentary. I am pleased to report that the group has delivered an outstanding first half result. All four core brands traded strongly over the peak cyber sales and Christmas holiday trading period as customers embraced the festive season, contributing to a record first half sales performance. And the market again has reacted really well to this particular announcement. Share price of Super Retail Group is up 7.8% today. So a good announcement from a retail company. Now, my only concern about these sort of announcements from retail companies is the expected pain we're going to see in retail in the next or this calendar year. Once these high interest rates affect those mortgages going from fixed to variable, I think we're going to see much less spending. And that's why I think some retail companies are releasing fairly good updates, but some companies are releasing fairly negative updates. And Baby Bunting was one of those companies that released a fairly negative trading update. So this is their trading update. So even though sales were up 6.6%, gross profit down 2.1%, pro forma net profit in Australia down 45%, and in the group down 59%. And when you look at the commentary from the CEO, Matt Spencer, nothing too positive there. So this is sort of a very muted commentary from the CEO. For instance, the gross profit margin deficit experienced in Q1 improved in Q2, driven by the execution of our recovery plans through the quarter that will deliver further benefits into second half. Mentioning they continue to invest in the business to support future growth as we work towards the long term. So nothing really positive here. Combination of a lower gross profit margin for the half and softer than anticipated sales in the December resulted in pro forma profit after tax result of $5.1 million. So I do look at the commentary, sort of the sentiment from management. Is there any signs of a little bit of a positive feel? And really, when you look at baby bunting, particularly compared to super retail group, much more positive down the super retail group. And obviously, because these numbers aren't very good, you can see the comparable sales growth here compared to financial year 22. We are sort of, don't know what double stacked means, but there is actually some positive growth in the first quarter, but in the second quarter, minus 7.2%. So the reaction from the market obviously is negative, and the share price currently is down almost 12%. Now, this is after a nice little run up in baby bunting share price over the past few days. The next interesting announcement was from INR. This company is a lithium explorer or something like that. A market cap of almost $1 billion. You can see the share price up 20% today. And this particular announcement was titled US Department of Energy loan offer of $700 million for the Rhyolite Ridge. I know nothing about iron ore, but again, this might be validating this particular project, the Rhyolite project, Ridge project. There are some specifications, some, some things they have to achieve before they receive that loan from the US government. What's the word? Preliminary. So the proposed loan amount is necessarily based on preliminary and partially complete information that the DOE required from Pioneer or Ioneer. And they also have to fulfill some further criteria to get this loan in the end. But again, the market has reacted quite well to this particular announcement. Keeps going up. Big Tin Can released a business update. And to be fair with you, wasn't all that positive about this particular business update, but the market sort of disagrees with me. One of the interesting things about this, you see in the title, 4C reporting waiver received from the ASX. Annual recurring revenue hits $130 million. So nothing too surprising here, apart from this little paragraph in respect to Appendix 4C reporting. Big Tin Can advises that consistent with ASX Guidance Note 23 and based on the company's consistent positive net operating cash flow, the company has received ASX approval that future Appendix 4C quarterly report lodgements are no longer required. I don't understand why ASX has gone down this road. So even though this company is operating cash flow positive, they are significantly free cash flow negative because of what they do with research and development. So I'm going to have to get this right. I am not an accountant, so let me just think about this for a second. So they capitalize their research and development, which doesn't affect the operating cash flow, but affects the free cash flow. And that's why they are operating cash flow positive and not free cash flow positive. In fact, they're highly free cash flow negative because they do spend a lot of money in research and development. So just how they deal with research and development makes this company operating cash flow positive, but they're still burning through a lot of cash. And I think, in my opinion, they still should be issuing Appendix 4Cs. So that's just my opinion. I'm not the expert on these matters, but I would like Big Tin Can to keep releasing Appendix 4Cs. But the market has done, it's up to 58.5 cents, up 13.6%. Now, the share price has lifted after a few weeks down because the company did announce a capital raising at 60 cents and the share price has fallen below that capital raising of 60 cents. So a lot of negative sentiment in this company, and maybe this is the start of the turnaround in the sentiment for Big Tin Can. I might not believe that, but it might be. Split It Payments, partnership with Alipay to power installments on AliExpress. I won't open up that announcement, but up 22.2%. But the market cap of this company is still less than $100 million. So again, another announcement that the market has reacted quite well to. Now on to the first Appendix 4C of this January reporting season, so December quarter reporting season. And when I say the first, I'm talking about a company that has cash receipts. I think we've already seen 2 or 3 Appendix 4Cs and 5Bs each, but those companies have no cash receipts. And the winner for this particular quarter is Little Green Pharma. I've already promised that I will do a video on Little Green Pharma. It was a request from a viewer, and the very fact that this, even though the share price is only up 5.7%, this is a positive Appendix 4C, in my opinion, even though the company is yet to be operating cash flow positive. But we can see, and I'll do a video on this company soon, the receipts of customers have been growing at a really nice rate. Receipts of customers in this quarter, $6 million, and the previous 2 quarters was about $8 million, a really nice increase in receipts. And not only that, the first 6 months of this particular financial year for Little Green Pharma, they were operating cash flow negative by about $8 million. In this particular quarter, they're only operating cash flow negative by $542,000 and free cash flow negative by about $700,000. So possibly things are turning around for Little Green Pharma. Share price has been going down for quite a while, and a nice little reaction from the market, but not a significant reaction at that. So look out for the video, an Appendix 4C video for Little Green Pharma, a profit upgrade from Tyro Payment. So first half financial year 23 trading update and improved financial year 23 full year guidance. This is the sort of thing I want to see. I am a shareholder of Tyro right now because I do think this is undervalued. So things are moving better than they expected, and that should be good news. So revised financial year 23 guidance, which is what I wanted. Now transaction value is up to between 42.5 and 43.5 million, about a 2 to 1.5 billion increase from the previous guidance. Gross profit about 190 million, EBITDA to be between 37 million and 41 million. So a profit upgrade from Tyro Payments. You do expect and should expect a positive reaction from the market. So let's have a look to see what the share price is up. Only 6.5%. I would have expected a better reaction from the market, but I just think there is a little bit of issues we have seen with Tyro Payments over the past few months in regards to a potential takeover from the company, a rejection of that potential takeover. And I think maybe some investors were disappointed by that. And we did see the share price take a bit of a plunge where they rejected that takeover. Is that it for today? So there was another one, which was an interesting one. So you can see 92E, 92 Energy released their Appendix 5B and quarterly report. I didn't have a quick look at that. And if we go a bit further up, Polynovo released their first half 23 indicative trading results. Not much of a reaction from the market. Share price only up 2%. So probably didn't surprise the market at all. And I think the only other one that sort of did interest me was released after trading had begun. And that was from Kingston Resources, which is a very small gold producing company, record gold production in December. I don't really follow this company all that much. Even though share price is only up 1%, the share price was at as high as 10.5 cents, which means the share price at one point in time was up about just shy of 10%, or about, we'll say 6 or 8% or something like that. Anyway, so this is a company I don't know much about, so I'm going to do a little bit of research because I am interested in any sort of small producing company. And there is that potential, but maybe it is undervalued. Markup of only $41 million. Is this company generating any operating cash flow and free cash flow? Is this company undervalued at this point in time? I just don't know. So let's have a look at the charts right now for all these companies I have mentioned in this video. I'm just going to have a quick look to see if any announcements have been released recently. So I'm recording this video 3 o'clock right now. So trading has finished for the day, apart from the closing auction. The last announcement was released by OMH Holdings, the last price-sensitive announcement. And we have just seen Domacom, DCL, release their Appendix 4C for the quarter. So let's open that up to see how Domacom, I don't know much about this company, and Domacom Receipts to customers, $1.1 million. Last quarter, only $400,000. And the company is almost operating cash flow positive. Ooh, this is an interesting company. Might have to do a little bit of research on Domacom to get a better insight on what Domacom does. Let's open up their quarterly activity report because I don't know much about this company, if anything at all. Well, they have funds under management, so it looks like they are a fund manager or something like that. Sometimes, if you don't know what a company does, they should have a little bit about company in many of their announcements, which will tell you what the company does. For instance, Domacom is an operator of an innovative fractional investment platform for a wide range of assets across wholesale and retail markets. The platform offers investors and financial advisors easy access, reporting, and transparency with a comparative low minimum investments, blah, blah, blah. So this is a financial services company that is almost operating cash flow positive. So I'm going to have a closer look at that. And maybe I'll do a video on Domacom since they are the second company to release their Appendix 4C. Well, I should say the second cash flow or cash receipts company to release Appendix 4C, because we've already seen 2 or 3 non-cash receipts company or revenue companies release their Appendix 4C. Now on to the charts. And before we have a look at these companies, let's have a look at DCL just to see how DCL has been performing. Not much happening with DCL, all over the place, going sideways, a little bit of volume. On the 23rd of December, share price rose 8% on fairly large volume. So I might have to have a look at that in a later date. So let's have a look at some of the companies that I've talked about in this particular video. Is this all the companies? I thought there would have been a little bit more. So starting with Black Cat Syndicate, this is starting to look really good. Black Cat Syndicate, a nice little rise on pretty good volume. So I don't only look at what's happening with the share price, I look at the volume, and we've seen really good volume coming today for Black Cat Syndicate. And if we go back even further in time, this could be almost a record day, apart from the 13th of April, the 19th of April, 2022, when the share price decreased 18%. So that was a negative announcement from the company that actually triggered or was a catalyst for the move or a shift in sentiment of the company, and the share price moved into a downtrend. You can just see the share price after that day moved really quite a bit down from about 60 cents, we'll say 55 to 60 cents, down to a low of less than 30 cents. So look, it does look like sentiment in Black Cat Syndicate is starting to turn around with this news on really good volume as well. So keep an eye on that. The only only company with a negative reaction from the market was Baby Bunting. So let's have a look at Baby Bunting. We'll just zoom in on what's been happening recently, because the share price had run up. So there's a nice little support level at around about $2.55. Share price had run up from or just above that level to $3.10. So some reason the market was getting a little bit excited about this company, and then that excitement has completely evaporated today. And it's really interesting because the company, there was some negative news back in October, maybe the AGM. We saw the share price decrease 21% in one day, 2.2% the next day, 6.3% the next day, and then 5.6% the next day. So the share price decreased from $3.90 to $2.70 in 4 trading days. And that was in October. So why were people trying or buying or wanting to buy in recent days, pushing the share price up? Because there was still negative sentiment. We're still going through this negative sort of financial performance of this company. And there was always the ongoing threat of another bad trading update from the company, negative trading update from the company. And the company has released that today on the 16th of January. But even though the share price is down about 12%, it's still just above that nice little support level. So if that support level does break, that would be bad news, negative news for this company. Now it's a Super Retail Group. And unlike Baby Bunting, this is a positive looking chart. Share price is now in an uptrend. We're getting higher highs, higher lows. Last time the share price was this high, at around about $12, was it $12.34, was way back in March of this year, February of this year, when the company released their half-year results, or last year, sorry, when the company released the half-year results. there was a big down day. Share price decreased 9.5%. So that was almost 1 year ago. So we're almost at a 1 year high for Super Retail Group. But I'm still wary around these retail companies. I do think there is pain in store for a lot of these companies in 2023. INR, which is Ioneer, share price of this company just going sideways, no trend at all. You can see the share price going up and down in waves, generally going sideways. You could probably argue with the consecutive highs being a little bit lower than the previous high, that maybe the general direction of the share price is down. But the most recent low was higher than the lows we saw back in June. I wouldn't be interested in taking a position in this company just yet, because the share price was at this level only a month ago. So it wasn't that long ago where the share price was this high. So even though the share price is up 21%, I'm not that interested in Ioneer. And I wouldn't be that interested in Big Tin Can either. When you look at the chart, another chart where there is a nice little support level, that support level for this company is 45 cents or around that level. You can see the share price reached 45 cents in June, 45 cents again in October, and both times we saw a bounce. And then they announced that capital raising start of December. Share price dropped 21.6% and then kept on falling, went to a low of less than 50 cents. I think the low was about 49.5 cents a few trading days ago. So a nice little positive announcement from the company, a nice reaction from the market. But again, share price is not an uptrend. I don't think this is a confirmed shift in sentiment of this company. I think the company will have to release further good financial news. I would like to see the company being free cash flow positive, not just operating cash flow positive. So still a little bit negative about this company moving forward. Split it. I have not looked at the split it chart for ages. I did have a look at the hum chart, or I showed the hum chart in one of my technical videos. I think the last technical video I released, and that was looking positive. So potentially some of these buy now, pay later companies, I think Split It is a buy now, pay later company. We can have a look. A technology company engaged in providing a cross-border credit card-based installment solution to businesses and merchants. So not quite buy now, pay later. But anyway, does look like the sentiment is trying to shift around. Share price right now is at about a 5-month high. Nice volume, but not extreme volume. You can see a lot of volatility in Split shares or the share price over the past 8 months or so. In May, also in August, share price went on nice runs. So maybe the bottom of the share price has set in for Split It, and that bottom would have been in June at less than 11 cents. So current share price is 22. So if you bought in the low in June, you have doubled your money with Split It. Not that interested in that company. We'll talk about Little Green Pharma, because even though this Appendix 4C looks good, looks promising, they are close to being operating cash flow positive in this one quarter. Maybe I'd like to see that continue in the next quarter, or possibly even becoming operating cash flow positive and free cash flow positive in the next quarter. But the share price has been in a downtrend for a while. So share price reached a high. In fact, the high was just above $1. When was that? That was the start of 2021. But the share price moved into a downtrend, we'll say in September of 2021, and has been dropping ever since then. It moved into the downtrend at around about 75 cents or so, and the current share price is 18.5 cents. A nice run in the share price in July and August. See share price increased from 22.5 cents to almost 40 cents, so almost a double in the share price then. But that was not an uptrend in the share price. That was not a shift in sentiment, not a lot of volume. You can see I would like to see really high volume for me to get excited in those little runs there. Interesting thing about the trading today is we have seen really good volume on the release of this Appendix 4C, but not much of a reaction in the share price. Share price only up 5.7%, but potentially maybe this could lead to the share price going sideways, consolidating until the company releases further good news. Now on to TYR. And this was starting to look positive back in August and September. Share price got to a low of 60 cents in June and has turned around, more than doubled. In fact, almost tripled from June up until December. So about 6 months, it almost tripled. Share price, or the shares, moved into an uptrend. And then we just saw the company reject that takeover bid. That's why we saw that big down day. When was that? The 12th of December, down almost 20% because there were some investors disappointed, but I think they were just overreacting. The share price, that was a low. So that tells you that there was an overreaction from the market, sort of very similar to MAF. I'll just show you MAF. So I did a video on MAF about 4 or 5 days ago. There was a negative announcement or trading update from the company. The share price fell on that day by 10.7%. And I looked at it and went, I think the market is overreacting because this is only a short-term thing because there's some revenue, instead of the company receiving that revenue in this particular half year, was going to be the next half year. So the company is always going to receive that revenue. It's just delayed by half year. So the market's going to overreact to that. And we have seen the share price rebound in the last 2 trading days. So the previous day on Friday, share price increased by 5%. And today the share price is up 9.5%. Not only that, the share price is significantly higher than it was just before the release of that negative trading update. So again, the market has overreacted. And sometimes when the market overreacts, it does lead to opportunities to buy into quality companies like, well, I'm not sure if I would call MAF a quality company. It's close to a quality company. And TYR Payments, I'm not sure I call this a quality company. But again, I think the market has overreacted. Even though the market capitalization is 711 million, I think this company can be highly cash flow positive, highly profitable in the next 5 years. And the share price, after the disappointment of the company rejecting that takeover, when the share price was down about 20%, reached a low of about $1.15. Share price right now is $1.46. And I think the share price can keep on going up from here. So that's it. Probably the only other one was KCN. Was it KCN? I might have the ticker code wrong. That's the wrong ticker code. Let's have a look. KNC. KSN. KSN. Close. So let's have a look at Kingston Resources. And yeah, nothing to be excited with this company at all. Even with this announcement today, not a lot of volume. The share price at 10.5 cents. You can see over the past 2 months, the share price has reached 10.5 cents and has failed to get above that level. So that is a nice little resistance level for this company. And I think that's all the companies I talked about today. So if you do have any questions about any of the companies I've mentioned in today's video, just leave your thoughts, your questions in the comment section of this video. Otherwise, that's it for today's video, looking at some interesting announcements on the ASX today on the 16th of January 2023. I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.